Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Thursday, the 28th of October. All right, now we're getting into some really sort of fun and games. The Bank of Canada, which was the key sort of event probably for the last 24 hours, has come and gone. There's a couple of things, actually. There was a surprise hawkish tone in the statement, right? And that did one thing. It sort of sent dollar CAD up. I'll show you the charts in a second. So it sent dollar CAD up to 124.20. But when they came back to the press conference talking about when that was going to happen, it was much later than probably the market expected, and we saw a reversal of the whole move. Also, just in that, so almost coinciding with that was the US durable goods, which were sort of weaker than expected. So bit of a double whammy here, and probably a bit of a heads up for what's coming with the ECB meeting today. Also, just of note before I go to the charts, US bonds, the yields fell considerably, right? I've been sort of signaling this and saying that the dollar block has got an inverse relationship with this at the moment. If the yields go down, okay, the dollar rallies, and the dollar block, euro, sterling, Aussie, Kiwi, fall. Now, they haven't exactly fallen, but they are sort of leaking. It's one of those leaky trades, very hard. Like, this is the fourth week of the month. We know it's the sort of the week where there's usually less information coming out or key macroeconomic data. The currencies want to go, but even with this big drop in the treasury yields, they aren't really moving too far. So I'm not stumped, but I'm surprised, to say the least. Now, let's just have a look here at, first of all, the dollar CAD. Now, I was talking about this the other day. We're starting to see a dollar CAD sort of base out here, and starting to see that sort of uptrend. The move, if the Bank of Canada was hawkish, was a potential move higher. It wasn't actually that big a move, right? You see, it sort of spiked higher, but then once they came out and started saying, well, yeah, we need to raise interest rates quicker, and then they came out and sort of basically said, yeah, it's not going to be for a while, maybe the third quarter of next year. Then that's where everything sort of slowed down and the damn thing just turned around. So very tricky for many traders. That was sort of the main headline going across the screens. And if you just scroll down through some of these stories, this is why it's important. If there is a press conference, keep an eye on it. He later added, so if you want it in months, sometime between April and September. This is why the Q&A part of a press conference is important, because they will ask them for specific times. And if he's actually willing to come out and say, this is the time, and it's later than what the market thought, or later than what they implied in their statement, you see that reversal of the trade. And that's exactly sort of what happened there with dollar CAD. So heads up for today's ECB meeting. You want to keep an eye on it. The press conference for the ECB is 45 minutes after the statement is released, right? So when you are looking for the event, I mean, there's no change of any rates or anything expected. So don't get excited about that. The statement may give us some forward guidance. The press conference is where the media gets to press them against the wall and ask them for specific dates, whether it's tapering, interest rate hikes, et cetera, et cetera. Like, the ECB is well behind the Bank of Canada, okay, as far as the economic cycle goes. So I don't think we're going to see anything too aggressive, but you may see a clear statement that says we are finished, or we're going to finish with stimulus, and that brings forward the interest rate cycles. All right, so that's something to think about as we go forward. Now, as I was saying with the, I've got the 10-year bonds. I was just saying about the bonds and the dollar block here. To me, they have been, like, you can see the orange line here going up against the bars, very much in sync with the up move in euro, right? This is usually the opposite sort of move you'd expect from the US bonds. Stronger yields usually leads to a stronger dollar, but we haven't seen that. Now, it is decoupling somewhat, because you can see that orange line dipping down here. The yields have fallen dramatically. We haven't seen the follow effect up on all these the dollar block pairs. Okay, you're starting to see them dribble lower through these trend lines, but if anything, they're sort of sideways with a hint of downside. I'm a little bit surprised that they haven't fallen yet. So what are we waiting for? Well, we're waiting for that key data. And most traders are sitting back thinking, well, I need more information on the US dollar and or the specific other currencies to get into action. At the moment, we're not seeing that connection. That comes next week. Okay, we got the FOMC, we got the non-farm payrolls, we got a whole bunch of stuff coming out. But until then, what you need to be focusing on is the pairs that are active. We've got the ECB today. So euro and euro crosses are going to be very active, just like the Canadian ones were yesterday, right? So tune into that. There's no point looking at, say, the Kiwi today when all the action's going to be on euro, right? Be dynamic with your trading. Get ready to look for opportunities. And that's the sort of key to staying ahead of the market and looking for those good opportunities. Like if you make cash in the 4th week of the month, give yourself a pat in the back, because it's not often that you see nice, easy trends and those things developing. There are short-term opportunities. Some of our guys have nailed some of the CAD crosses yesterday. Well done on that. But today, the action switches back over to euro. So that's where you need to be focusing your attention. All right, guys, it's going to be pretty interesting. Now, with the just on that ECB, because we're not expecting any sort of major changes, this is, once again, like the Bank of Canada, it's tricky. You get the statement, that's one thing to consider. You get the press conference, and then you get the Q&A afterwards. So there's a roll-on effect of events. The slightest comment about, stopping the stimulus or continuing it will add upside or downside moves to euro. So it's very hard to sort of gauge that. I would be sitting back watching. If there is something pronounced about interest rates or any sort of forward guidance, that's the time to trade. But keep an eye on the press conference and the Q&A afterwards. As I said, 45 minutes after the statement. That's the key to it. In the meantime, keep an eye on that US advanced GDP numbers. That may give us an idea of the state of affairs in the US. And then, of course, also the initial jobless claims. The weekly number may add some spice, may not, but just keep an eye on it if you're in that North American session. All right, guys, it's going to be a reasonable day for the European traders. So hang in there and best of luck. Cheerio.